Hello again, today is May 24th, 2019. This is Alex with MasterChartsTrading.com and this is Market Recap. First of all, please hit the like button and subscribe to this channel as usual. Your contributions and your subscriptions is what keeps this channel going. So again, not much has happened in the stock market, pretty much traded sideways. Some sectors actually broke to fresh high like utilities and XLP, the staples are trading next to fresh highs, as are Swiss stocks. They are at 52-week highs, and my position is still open in EWL. We'll look at Indian stocks as they gain on the heels of Prime Minister Modi re-election. Junk debt is still working in lockstep with the stocks, so this is a good sign. The yield curve is inverting even further, and the inversion is steepening and now is extending to 10-year treasuries. So it is definitely getting concerning. So we'll examine that. Dollar is pulling back. We'll see if it's finally reversing. And copper futures, man, we had a big win on copper futures. The alert was sent to go on the short side, basically. Cryptos could easily go higher, and we will, basically discuss that. I actually still have a position open in Bitcoin, so we'll look at that as well. Okay, so let us look at, first I'm gonna get rid of this so it doesn't concern us right now. Let me get to S&P 500 ETF SPY. So S&P 500 ETF SPY, this is a fresh record high just a few weeks ago. And now we're pulling back. Basically, nothing abnormal about this action. Now, of course, we could still go deeper, deeper pullback. But I think if it gets to 272, in this case, this is the blue line, then it would be a strong buying opportunity, like what we did here in February. Dow Jones, similar thing, basically pulling back. The deeper it pulls back, the stronger the buying opportunity. We basically did the same thing back here in January and February. And QQQ, same thing. There is the breakout on 13th of February, actually even on 5th of February. Alert was sent to my subscribers at MasterCharts Trading, and then we see a pullback. Now I wanted to mention the indicators. The indicators on this chart are my proprietary indicators. You can find them at MasterCharts Trading, and on TradingView you can look for them as MasterCharts Trading. Some stock sectors are hitting fresh highs. This is obviously good news for the stock bulls. I'm a stock bull right now, and I want to be buying the stock market. So some say that utilities breaking to fresh highs is a sign that we need to be worried, a cautionary sign. Now, I sometimes think that, it's a valid argument, but most of the time I don't really worry about it too much because utilities are basically stocks, so they still behave like stocks. And yes, so they are at the fresh highs. Yes, interest rates are lower, so it does make sense for utilities to benefit for two reasons. Because number one, the interest rates are getting lower and utilities constantly need to borrow money, so lower borrowing rates is good for utilities. And number two, they are stocks, so they are being helped by the general stock market to be pushed to fresh highs. So we actually sent an alert as well here for utilities in January, and this is a very nice gain of about over 12% actually. So it's pretty straightforward system. We look at the indicators. You can see the blue line right there. Find out more about them at MasterCharts Trading. And this is all we do. We just buy and break out above them. You can have the same indicators on your chart. It's super easy. No need for any fancy software. It's all web-based. XLP, consumer staples, so very similar thing. There's the breakout right there on 8th of February. Another opportunity to buy. We actually sent an alert. And then it just continued to record highs. Freshest record high was here on last week on 16th of May. Right now, we're basically trading next to record highs. Again, some would say that this is a defensive sector, but overall, these are definitely stocks. They're not bonds or anything like this. So I think that, this is not an interpretation of risk aversion. I think this is an interpretation of bullishness of a general stock market. It's just right this instant, the leaders are utilities and staples. That doesn't mean that we're about to roll over into a bear market. Although when we get to the bonds, this could be the fact actually. And here's my position in another stock fund. This is Switzerland, and I wanted to show basically what we do. Again, the same thing. We just do the same thing over and over and over. Right there on 15th of February, I actually opened the position myself. Excuse me. And it just went in my favor. So I kept sitting there, and then I'm gonna sell some of it. Sold some of it there on the 7th of May, and notice what happened next. Another fresh high. So with stocks, generally speaking, again, it's better to sit tight and do nothing and only eventually sell them. But it's not always possible. EPI, this is Indian stocks, Indian stock fund, and we can see a breakout right there on 11th of March. We actually traded it as well. I've sent an alert here. Here, a few weeks ago on May 8th, I was like, okay, this looks like a setup to me. This looks like an opportunity. But then looks how it between the 17th of May and 20th of May, and between over the weekend gap, and we had just a huge gap because the Prime Minister Modi had a re-election, and it just gapped above the blue line. So I didn't want to have a chance to send an alert. I like to send alerts like right around the blue line. For example, like right there on March 11th. That was just a perfect alert. But here, okay, let this one go. So many stocks sometimes they just get away. I'm like, whatever. There's so many opportunities. Junk bonds, nothing unusual. Same general principle right there is a breakout on January 30th. Right there. And then since then we just keep looking for buying opportunities. Right now junk bonds are pulling back. Can they get even more cheap? Possibly. If they get to 105, I think it will be a killer buying opportunity, especially if the price action confirms. But overall, junk bonds and stocks move together on lockstep, so there is no divergence between the two right now, and this is a good sign in my opinion. Right now, junk bonds and stocks are moving together. That means we are seeing a preference by the investors for the more risky assets, such as junk bonds or stocks. Of course, also, we are in the middle of a bond bull market. Here is a short-term bond fund, BSV, and this is an actual alert again, right there on 31st of December, right on before the New Year's. So alert was sent, and again, notice what a nice gain it is, and it makes sense to hold, right, versus selling quickly. How much to hold? It's a difficult question to answer because sometimes the price action is just explosive like this and it just continues, and sometimes it just meanders back and forth. So overall, the bonds are breaking to fresh 52-week highs, and this is, I will show in a few minutes, is causing the yield curve to invert. In other words, short-term yields are actually yielding more than the longer term yield. So BSV gaining, IEF intermediate 7 to 10 year funds. Look at this. This is a fresh 52-week high for 7 to 10 year treasury bond fund. And when I show the yield inversion, it will be pretty obvious actually. And the same goes for the 30-year treasury bond fund. And I actually still have a position open right there. I opened on 11th of January. So let me show you that yield curve inversion. Let me see how would I get there. Okay, so here it is. So I don't know if you can see it. Let me make it bigger, I guess. Okay, so here we go. Excuse me. So currently today is May 24th, right there. Now what we're looking at is we're looking at a short-term interest right there at 2.32%, which is basically 3 months. Notice that the 2-year, 5-year, 7-year, and now even the 10-year yields are actually below the 3-month yield. If that makes any sense. No, it doesn't make sense. This is called the yield curve inversion. So yield curve inversions are not great, and they, again, I keep showing the same charts. You know, before the bear market started, you can see short-term yields above the longer-term yields. Same goes for the 2000 right there. We see a yield curve inversion. So we're getting there. This is a normal kind of curve. Ideally, what we want to see something of this nature. But you know, overall, we're getting to the point of yield curve inversion, and you know, in my opinion, excuse me, I need to zoom out. So it's getting. See how deep it's now. Even the 7 and the 10-year yields are below the short-term yield. So not a great sign. Not the end of the world yet, but you know, anything is possible. And here's that 30-year Treasury note yield, TYX, breaking to new low. So we're as low as, let me see, what was it? 2.73%. So it's getting quite low. Let's continue to the dollar index. I'm not going to show any of the currency pairs, but I will show the overall dollar currency index. And you can see that the trading range back here, where I'm hovering, like in April, was huge. It was like 562 pips. Right now, the trading range is about 340 pips. So the trading range is narrowing. This is usually when the trend changes happen. Right now, dollar is still, excuse me, in a bull market. The bull market began right there, in my opinion, in May of 2018. And right this instant, we're still in a bull market. Are we going to reverse into a bear market? There needs to be a lot of work by the components of the dollar to gain versus the United States dollar. Hasn't happened yet, but it could happen, so I'm still waiting for that reversal. And I already pointed out many times that it might be reversing, and it's just not reversing. So we'll see if it finally reverses. Wanted to show another beautiful trade. We just recently sent an alert here for copper, and this is copper futures. Now you could trade it with options, I think, too. I think there are some ETFs that can be traded with options. Not a great over-the-counter, you know, retail trading, not very useful trading vehicle. But if you have a futures account, then you could have opened just a super profitable position right there on May 7th, right there, alert was sent, and we just had a beautiful move in our favor. So if you opened, congratulations to subscribers. Let's continue to the various Bitcoin, Litecoin, etc. So here is Litecoin, and basically it's going towards fresh highs. I think it might break out and continue higher. I don't see anything abnormal with this chart. This looks pretty good. Bitcoin, beautiful move in my favor. Actually, I opened the position myself, and there the position was open at 5,700, and then finally, currently it's around 8,300. So looking really good. I think Bitcoin can easily continue to fresh highs. Finally, here is Ethereum, and same thing, alert was recently sent to my subscribers, and on 13th of May right there, with a 43% gain. So overall, a very nice move for the cryptos. If you're interested, and I hope that you are, please continue to MasterChartsTrading.com. That's MasterChartsTrading.com. Click on the sign up and sign up for one of the services. We currently have the alerts, the trading indicators, and the both trading indicators and alerts. And when I say the trading indicators, I mean the lines on the chart that you just saw. This blue, red, yellow, and green lines, and they are very helpful in making trading decisions. So do sign up for alerts, trading indicators, or both. I think the price for both is great, especially if you sign up for the yearly. But you can also try, and there's always a 30-day free trial with no commitment. Alright, that's it for today's recap. Thank you for watching, and if you have any questions, please send them in. Have another great trading week. Bye-bye.